Welcome back to Fresh Economic Thinking for another episode. I'm very lucky today to have Rob Sobyra. Is that right, Rob?
I love it. First time. Well done, Cam.
uh, Rob's the executive director of BuildSkills Australia in research and planning. And the reason to have Rob on today is not just to pick his brain about construction skills and the construction industry, which is hugely topical at the moment, but to also talk about a bet that we made with each other earlier in the year about economics and to see who is looking the winner. But we'll hold that for a moment. Welcome to the show, Rob.
Yes, thanks for having me, Cam. And I suspect if the bet had gone the other way, we wouldn't be here on your podcast.
There you go. So maybe you could introduce yourself for the listeners. What's Build Skills Australia and what keeps you busy day to day, sort of in the construction sector?
Yeah, sure. So Build Skills is one of 10 jobs and skills councils that was set up by the Australian government to essentially work with industry, government, unions to deal with all the big workforce challenges facing lots of different parts of the economy. And Build Skills is the council responsible for construction, property, and water. So my job there as the head of research is to um, I guess, look a bit into the future, get a sense of the demand side drivers on, jobs and skills in those sectors and what the supply side's looking like. And
Mm.
often these days when we do these exercises, there's a gap, which then invites a conversation about, well, what can we do today to make sure that when we arrive at 2030 or 2040, when we've got a lot more stuff to build and a lot more property assets to operate, that we've actually got the right people with the right skills to do that.
Very interesting. So what sort of data do you sort of look at when you do your analysis? Do you have any proprietary data, or do you go out and survey people and have meetings and roundtables and invite people and say, what's happening, guys? How do you sort of extract the information from the ground level?
Yeah, so sort of all of the above. So, all the routine data sources from ABS, you leverage things like the Hilda survey for certain studies. So all of the usual sorts of authoritative data sources can be a pretty rich source of information on jobs and skills. There's quite a lot out there, but there's
Mhm.
plenty of areas where there's no data yet. Of course, one of the biggest areas where there's no data yet is the future. And so we
Yeah.
do work with partners to do modelling on future labour market outcomes. We do a lot of work with Oxford Economics, leveraging
Okay.
their whole of economy model to do that. And then when we're looking at really sort of micro issues, we'll go out and we'll do sort of original data generation surveys and
Mhm.
focus groups and things like that to draw out those sort of insights that you can't get in the data.
Very interesting. So here's the question. I can't. I'm trying to look for the dates when we had a conversation, and whatever you were seeing in the data led you to predict that by December 2024, is that right? That
Yeah,
unemployment, the official unemployment rate in Australia would be above 4.7%, right?
yeah. Around 4.75 or something, I think is where I was at that point in time. But it's
Yeah.
interesting, before I got on the call, I was looking back through my model that I'd built that got me to that number. And the first iteration of that model I built in December. No, not December, but it was like in 2023. So it was quite some time ago. It was like, yeah, no, I think it was December 2022.
Mhm.
Yes, December 2022. So there's been a few iterations of it, and I've obviously been tracking the inputs over time. So it's moved a little bit. And then when we had that conversation, I was still fairly certain we were going to get up above 4.5 by now, which we
Yeah.
obviously haven't. Yeah.
Yeah. So I do you know why I bet against it being over 4.7%?
Mhm.
You don't? I just
Go on.
literally looked at the curve and I said, I've never seen that line curve in that direction before. I'm like, macro shocks just take longer than you think. And my lesson from the financial crisis was, well, everyone wants to panic, but when should we do it? And it's like a slow motion thing. And I just thought December's too early, like the huge leaps and the collapse in construction. And I was hearing from people in Brisbane trying to do construction projects that, engineers won't answer the phone and give me a quote on design things. I'm like, well, how are we going to have high unemployment when this very broad industry is just absolutely going nuts? It would have to be this unusual change in the curve. So anyway, it looks like we're not going to get anywhere near 4.7%. What what do you think turned out differently? Because I actually remember about this time last year, people in construction industry telling me, "Hey, I work for a window manufacturer and man, the orders have just dried up. You're going to see the bottom fall out of this next year." And someone, was making some other part like prefabricated thing for houses and they said, "You just wait till the second half of 2024." And I thought, oh, okay, well, that's interesting. What were you
Yeah.
hearing that made you sort of predict this sudden surge?
Yeah.
Because we have seen it in other countries, haven't
Yes.
we? Why are we different?
To an
What were you
extent,
seeing? Yeah.
most countries most countries are still surprising, to the upside or downside, whichever way you want to look at it. And um, I think it's fascinating, and I've obviously been conducting my own post-mortem on my own thinking, and I think it's very analogous to the remember sort of last year there was this consensus that America was going into recession. There was, a lot of voices saying Australia's heading the same way, and
Mm-hmm.
it's, we got the soft landing. I think, it's got to be admitted, that we either got a soft landing or no landing. At some point there will be a recession in the future in the United States, but I think it's getting a bit long in the tooth to claim that we're going to get one as a result of this latest rate hiking cycle. So
Yeah.
I think it's analogous to that. And so to answer your question directly, the way I was thinking about it is, what is the unemployment rate? It's the balance of the supply of people who are looking for work, who would like a job, and the demand from employers to employ people in a job. And so you can sort of unpack the unemployment rate structurally in terms of the supply of labour and
Mm-hmm.
then, the participation rate, and then also the demand, so employment growth. And when you looked at the supply side of the equation, this was at a time when immigration was pumping. We were up
Yeah.
around that 300,000 per annum kind of run rate. And so it looked like the supply side was becoming completely saturated, which it was. There's no question
Mm-hmm.
about it. When you look at the civilian age population over 15, it's well above the pre-pandemic trend now. So it obviously fell well below that trend during the pandemic, and now we've shot straight past it. So there is an abundance of labour supply in the country. So all else equal, that should put upward pressure on the unemployment rate. So that was sort of number one that got me thinking, okay, the pressures are pushing us toward a higher unemployment rate, keeping in mind no one was talking about anything catastrophic. A 4.5% to 5% unemployment rate would be quite nice by historical standards. So
Yeah.
it was this sort of thesis of mean reversion more than anything.
Mm-hmm.
Anyway, so the supply side looked like it was definitely pushing in that direction. And then you turn your mind to the demand side of the economy, and the RBA is in the midst of the steepest rate hike cycle, rate hike
Yeah.
cycle in the history of ever. And so, if you and that was dampening demand. So it was pretty clear in the data that employment growth was slowing. It hadn't gone negative by any stretch, but it was definitely heading towards zero employment growth on a year-over-year basis. And if that trend had continued through 2023, or actually into 2024, because at the end of 2023 there was a turning point, and employment growth actually switched around and stopped decelerating and started accelerating again.
Correct.
Um, Yeah, and
I'm
so
looking
that's
at the
what.
chart right now, yeah, and it really
Yeah,
just looks like it's
it's
about to roll
incredible.
over if you're
Yeah,
listening. And then it just launches at a steeper rate, sort of
yeah,
the beginning of 2024.
yeah. So I think if you do the numbers there, Cam, you'll find that the quarter to September, something like
Hmm.
150,000 jobs were created.
Hmm.
Like you've got to go back to, aside from the pandemic period where we were obviously creating a lot of jobs, aside from that sort of boom, you have to go back to the post GFC stimulus environment to see that level of employment
Wow.
growth. So it's pretty extraordinary what we're seeing on the demand side. And I don't think anyone predicted we would get this sort of demand response. Maybe you did, mate. Maybe
No,
you
no.
did. But in the
Let me just
face
be
of that,
clear.
those rate hikes, yeah,
I just thought the trend that you had forecast was qualitatively correct, but far too accelerated. And that was
directionally right, but not in
correct.
magnitude. Yeah, yeah.
Yeah, just it's too soon and it's too fast. But if you gave me another 12 months, I probably wouldn't have bet the other side of it.
Okay. So it's funny you say that. So the model at the moment is saying October 2025.
It's every year it pushes it back a year, does it?
Always 18 months out, mate.
That's classic economic forecasting. Oh, well, actually, my mates ask me all the time, like, oh, what's going to happen to property? What's, and I'm like, oh, it'll be pretty much the same, at least for the next 12 or 18 months. Then something could happen. And like, because it does, it
Yeah.
happens slowly, right? So you're pretty much always right, in saying that, oh, not much will happen for 12 months and then something will happen in
Yeah.
18
And
months.
I'm also reminded, I don't know who said it, but there's a famous dead economist who said something along the lines of an economist is someone who can explain to you today why their prediction yesterday was wrong.
Well,
And that's
yeah.
exactly what I'm doing.
Well, honestly, if we were in New Zealand right now, I would be trying to explain to you why I was wrong because
Yes.
and I don't have a reason why Australia and New Zealand have had such a different economic uh, period this last 12 months. I really don't, because what's happening on balance is Kiwis are moving to Australia because our economy is good. And so that's somehow, despite all the immigration spike, people are spending and businesses are growing and soaking these people up. Yet in New Zealand, the opposite's happening. People are leaving and people are getting fired. Now, you can, the macroeconomic cycles hat would say, of course, in a cycle, people leave and get fired, and in a boom, people arrive and get jobs. Um, but why? Where's the cycle come from, right? That's
Yeah.
the mystery. Do you have any insight into what's happening in New Zealand in maybe property or the construction sector that's noticeably different from Australia?
Yeah, I'm really not sure. I mean, they started earlier, didn't they, in their rate hikes,
That's true.
and they went harder, quicker.
That's true.
I don't know. Maybe it hit them harder. Um, I've been thinking a lot about what has underpinned this demand in the face of the monetary tightening, and I think part of it is the fiscal impulse from the public sector. So a lot of people sort of point to public sector job creation as being particularly strong at the moment, and it is. And when you look at public spending as a share of aggregate demand, Cam, you'll see it is very high and growing. So it's like 10% year on year is the year on year growth in public sector demand. So
Wow.
so there is a sort of a pushing and pulling on the demand side. You've got the RBA trying to tighten, and you've got governments kind of being looser with their spending more and more. So that's an offset, but still, the lion's share of final demand is the private sector. So I don't
Yeah.
think it explains everything.
Yeah. You also, yeah, that's a good point. You notice that the private sector is expanding, and a lot of that is in care work, and maybe the NDIS post COVID really had a surge. That might that might change very suddenly. Like there seems to be a
Mm.
big political motivation to really tighten that up, the spending. Um, but the other thing that I find interesting in this period is that the spending by older households is still growing, and the monetary tightening is really affecting the younger households with the largest mortgages. And of
Yeah.
course, higher interest rates, a lot of retirees have safe assets that they live off in addition to their pension. So they're getting higher interest rate. My mum's like, oh, finally, I'm getting some interest. I'm going to go spend some money. Right. So are you trying to say that, yeah, we've got a monetary squeeze, but we don't actually have an overall squeeze on spending in general because of
On
these other
spending,
factors?
yeah. And the question is, what are those other factors? What are the sources of it? One of them is probably fiscal. Another one is probably kind of what you're alluding to, maybe, which is a bit of a wealth effect.
Mm,
Obviously, property prices rocketed during the pandemic, so a lot of people have a lot more equity. Maybe people are withdrawing that, keeping some spending going. And maybe there's been some investment led um, sort of spending happening, out of the huge stimulus during the pandemic, if that generated some productive investments, and then those are now, self-fulfilling in terms of ongoing employment and income.
yeah. So you're sort of suggesting in the wealth effect that a lot of the committed construction spend, for example, actually was committed 2 years ago, but is now in the GDP and employing people today. So those capital investment decisions were made. And I know that's true because I know some property developers who've just been waiting 12 months. They're like, well, I can't start a project. I have to finish this one. But I pre-sold that one during COVID. And now, so it's all the ducks are lined up. I just have to wait. So there's this overhang of that.
Yeah, a
This,
sort of a tail.
do you
Yeah.
notice this in
And
construction in general? Because, yeah.
yes, and
Okay.
we can actually see it in the data. So in the building activity data, what we normally see is a very tight coupling between commencements of projects and completions of projects. So if commencements spike and then come down, completions will spike 9 months later and then come down. And we got a huge spike in commencements during the pandemic, but we didn't get the corresponding spike in completions because
Mm.
everything was taking much longer to build. So we're sort of amortizing that initial investment, like exactly what you were
Yeah.
just saying. Yeah. So I think that is propping up a level of demand in construction, even when approvals are at their lowest level in 15 years. There's still that, as you say, that overhang of those pandemic commencements that are holding up activity.
And is that different between states? Because we're both in Brisbane, and Queensland got its billions in royalties the last couple of years, and it has a hospital upgrade plan and a railway station upgrade plan and lots of big projects. The Cross River Rail's still under construction, the casino's just finishing up now. Is Queensland different? Or
Queensland's the outperformer, definitely.
okay.
I would say, the figures I was looking at were national. So if New South Wales and Victoria were materially going in the other direction, that would show up in the national figures. So I suspect it's fairly broad based, but I think there's little doubt that Queensland's the sort of the centre of the building universe at the moment.
Yeah, well, those Kiwis have got to go somewhere, don't they?
Yeah,
So
come over.
you mentioned earlier the surprise in the employment data that there was the big immigration spike. It looked like job creation was leveling off, but then it all flipped. I want your views on this conversation that's being had now about we need more immigrants to build the houses for the immigrants. What's your take on that sort of story? Because I know you've been involved in doing some analysis there.
Yeah, we've had a look at it. So immigration is obviously a lever for labour supply generally. Then certain sectors of the economy use it quite widely. The medical field, for example. Um, the construction industry doesn't use it very much at all, and some people think that we should make more use of it and get help to plug the labour shortages through that channel. The issue with it is we've done the numbers on it, and sort of between now and 2029, under normal operating conditions, you would expect um, emigration, so people leaving the construction industry to go overseas
Hmm.
would more or less match the number of people coming into the construction industry from overseas. So in net terms, it's a bit of a wash, but it's actually quite a small channel. When you think
Mm.
about where do the labour flows come from into the construction industry, the vast majority come from other parts of the economy. They're coming in from other industries, or they're coming through the education and training pipeline, apprenticeships, universities, and so on. So those are really the two big channels of labour flow. This sort of
Mhm.
emphasis on migration is quite out of whack to the amount of impact it could have
Right.
on the aggregate result.
Yeah, right. So I guess that's interesting. So compared to the inflows and outflows of immigration from other parts of the economy and young people getting into trades and things, the immigration thing is small. I mean, the construction industry is big, right?
Huge,
Yeah.
huge. Yeah.
What
Yeah.
what's
So
what's the
like
sort of
even so
total number share of employment in construction broadly and maybe residential for people who are interested in housing? Do you know that off the top of your head?
okay, so if you say the construction industry, call it a million, and that's everything from house construction to commercial construction to roads and bridges and infrastructure construction. The building sector of that, so what we call the vertical
Yep.
construction, is the lion's share of that. And then the residential component is about 40% or so of that.
So you're talking sort of 400, 3 or 400,000 people building homes. And that's the on-site people. This is not people who work in the window manufacturers thing, warehouse, or it
Yes.
sort of includes a bit of upstream, not just on-site
No,
work.
it includes people who work for anybody who works for a company that is involved in the process of construction. So whether that's a subcontractor like a glazing firm or a tiler or a
Got it.
plastering firm. Yeah. But if you're the accountant working in that firm, you're still counted.
Oh, okay.
You see
Yeah,
what
yeah,
I
yeah,
mean?
yeah,
Yeah.
yeah. I see.
Yeah.
So it's the
Yeah.
employees of the firm who work in the industry, not the
It's
industry
a
who
firm
work
a
it.
firm
Yeah.
based classification. Yeah.
Yeah, that makes sense to me. Yeah. So here's one issue that has come up in many events I've been at recently in Queensland is the unions. Apparently, people who pay to have construction done on their property really don't like unions. And my question is is this a real thing? Is it a cyclical thing? Because my impression is that we've had unions a long time and house prices didn't do anything for 10 years in Queensland. And now there's this sudden surge. Of course, there's bargaining power for labor during this period, and unions are going to be disruptive. But do you know what? When things crash, they're going to be much more easy to negotiate with. Is that your
Yes.
take? And second, sorry, two-part question, then I'll leave it. This period where there's a shortage, is it attracting young guys into construction more? Is that channel really broadening in the last couple of years, or does it not not change very much over the cycle? So two-parter.
Yeah. Okay. So the first part, let me let me make the suggestion maybe, and it's kind of where you were going, I think, is what actually happened during the pandemic. It was a step change in the price level of construction, the input price of construction, of which labour is the principal component.
Mm-hmm.
Okay. So, we have historically had, call it 2 to 4% building price inflation.
Mm-hmm.
During the pandemic, rocketed to like 10%. That has since come back down to between 2 and 4%, but it hasn't gone negative, right? So if you think about what that does to the line takes a step change and then keeps going up. It doesn't go back down to the previous level unless prices go negative. And prices very, very, very rarely go negative. I think there are 2 or 3 times on record where it's gone negative, and that includes the 1990s recession and the GFC. So it takes a pretty serious economic conniption to send price inflation negative. And I mean, there are good microeconomic reasons why. Like if you've just given, I don't know, an operator at a concrete batch plant a 20% pay rise, are you going to turn around next year and say, oh, can I have half of that back? Because
Yeah.
that's what it takes for
Yeah.
pricing to go negative. So instead, what happens is they tend to go close to zero and then just flatline for a number of years. And you're amortizing that that price rise that was initial over a long period of time. That's what we saw after the GFC. Um, so anyway, I think that is what's been happening is the input prices for a property developer have gone significantly higher, eaten away all of their margins. And because labour is such an important component of that, that's where their minds have gone. And then they then make the leap to enterprise bargaining arrangements and public sector
Yeah.
EBAs and things like that.
But you're saying now that actually until this step change in prices, all those things existed, but it was still a 2 to 4% price rise on average.
Yeah,
You know,
yeah,
a little bit more than inflation because such a large component is labor, but not anything unusual.
yeah. And
Okay,
and I think
interesting.
I think those pandemic conditions applied across the whole economy that drove that
Yeah,
step change in building prices. We've got a step change in all prices, didn't we? So yeah,
yeah. So the
analytically, I think it's
lawyers and
difficult.
engineers are charging more as well, even though they don't have a union. Is that? Well, maybe they do have a union. We just call it a professional association.
I mean, everything went up. Everything went up.
Yeah, of course.
Yeah,
Yeah.
yeah.
So did that draw in people into construction trades? So that was, how flexible is this entryway into construction? To give some context, my eldest son's finishing school next year, wants to know what to do. He's he's
True.
not that interested in academic stuff, but he's interested in running a business and getting things done. And so yeah, we're talking to mates in the trades and how they've gone. Have you seen a response? What's the post-COVID
Yep.
training channel been like? Yeah.
Yep. Well, there's a really interesting sort of natural experiment that happened during the pandemic in this space, talking about apprenticeships in particular. So as you probably know, there's this sort of trope out there that no one wants to do an apprenticeship anymore, and all the kids are turning their back on their trades, and no one wants to work hard, and kids these days, all the usual stuff. So what happened during the pandemic? One of the major supports that the government made was an apprentice wage subsidy for employers. So the federal government footed the bill of an apprentice's wage to the tune of 50%.
Oh
So it
wow.
literally cut in half the wage bill, if for apprentices. Um, so what did that do to the number of apprentices in training? Shot through the roof. It
Oh,
exploded.
okay.
Yeah, yeah. So
Like what
what does
what
that
sort of
tell you?
percentage are we to? What's shot through the roof? Like I don't know what the normal variation is.
Like
Is 10%
like a
or
doubling,
50%?
like
Oh,
a
doubling.
no, like a
Wow.
doubling.
Oh,
Yeah,
okay.
yeah.
That is really
It
shot
was
through the roof.
enormous.
Okay.
Yeah.
Got it. Got it.
So I'd be interested in your view on this, the sort of microeconomics of it. But my take on that says to me that the apprenticeship market is constrained on the demand side. That is the appetite of employers to put
Yeah.
on kids, not on the supply side, appetite of kids to take on an apprenticeship. Seems to me that what was holding us back from taking on more apprentices were employers, the cost of it essentially. And when that
Yeah.
cost came down, they were ready to take more on, and there was a reserve army of apprentices sitting there ready to come in.
Wow. That's that's interesting. And so what's going to happen in let's so this is my concern about these sudden adjustments, right? Because you got 3 or 4 years as an apprenticeship, right? In most
Yes.
trades. And so um we've just doubled it. So we're going to have this 1 year in 2026 and seven where suddenly there's twice as many, new plumbers, electricians, you name it, working for themselves, trying to drum up business. Um, do you think there'll be an effect then on, sort of suppressing that bargaining power across the market, or do you think it will smooth itself out between now and then? So
Yeah,
What
it's
are your
interesting. There are
thoughts?
a few. There's a few schools of thought when I've shared this data with different stakeholders. Some of them think, "Yep, great. That means more tradespeople in the trade pipeline. We know in 5 years, 10 years, we're going to need more than we have now. So great. This might just be the shot we need." Other people are concerned that the sorts of people who are encouraged into an apprenticeship just because of the wage subsidies might not be that well suited. So we might see an increase in non-completion rates. And it's too early to tell, frankly. But maybe.
Yeah, I mean, you would expect there to be an increase, right? Like economists would say, yeah, when you get a doubling of something, you're going to increase the dropout rate because the people are more marginal, right? So if
Yes.
you're an employer who gets to now choose your apprentice out of a pool of five people because you're only willing to take on one, then you're going to pick the who you think is your mate's kid or whoever's going to last. But now you can take
Yes.
on two, so you go next one down the line. So my economist hat said, well, of course there'll be some increase, but maybe the elasticity might not be very high. And
Right.
in 4 years in Queensland with the Olympics and all the other pipeline projects, you might find that actually this matched really well with the timing of just investment in construction in general. Like, um, yeah, I guess I'd be worried. So what happened in Queensland? Not sure if you remember after Patel case, the foreign doctor
Yeah.
who was very dodgy. They realized that, oh, I know why we have a doctor shortage, because we have a limited quota on medicine degrees in Queensland. So we literally only have 200 or 400 places per year. Why don't we double that? And so we did that. And then we had the same thing happen in medicine of twice as many coming through. Hospitals couldn't really have all these junior doctors, traipsing around all at once. And they've sort of come through the other end now, and it seems to be functioning well. So probably this is one of those once-off things that was needed um, in that sector. I don't know. I'm just thinking out loud and seeing where it goes. Does that
It's an interesting thought that you offered there about is it diminishing returns?
correct? Yeah,
Is
yeah.
that the thesis? Yeah, yeah, yeah.
Because
That's
if
I
you're
hadn't
if you're
thought about that.
constrained on the demand side, right, you're going to sort all the prospective apprenticeships by quality, however you do
Yeah,
that, and then you're going to pick off the top, right? And if we're
yeah,
picking twice as far down the quality length, the quality stack, then of course some will drop off. But at the end of the day, Australia's very good at trades. Like if you're an Aussie
yeah,
tradie and you go traveling abroad, everyone wants you because they know
yeah,
you can get stuff done. You're not going to
yeah,
build something that's going to fall down. You're not going to cut corners. So I'm generally confident, but it will be interesting to see the other end of this. Are you not doing
yeah.
any like academic research on it? Because it's one of those natural experiments that probably deserves.
Yeah, we're looking at it. We
Okay.
are. Yeah, we don't have anything released at the moment, but yeah, we're definitely very interested in where this goes. And there's also a national review that's been done on incentives. So there were, some parts of the industry thought those pandemic incentives were wonderful and should be kept going, and other, well, they were fiscally completely unsustainable. Like I don't think anyone disagrees with that. I think they cost like $3 billion or something. So you sort of can't keep that going out of, well, yeah, sure, open question maybe, but
Look, I mean, you got to put the thing in the scale of the construction sector in the country, right? Um, we're talking, just on house construction. What do you got? 140,000 at 500,000 each per year. That's just residential. Remember, that was 40% of the total. Like, in terms of, the construction sector, 3 billion a year is a rounding error. Like, you wouldn't even have that many decimal places. The question really is that how we want to structure our economy, and do we think this industry deserves to be subsidized for its training? Well,
yeah,
maybe you have some kind of hex scheme that goes with it, like half.
it's just,
I don't know.
well,
Like
yeah,
hex is a sort of partial subsidy, right, to university.
yep,
I don't know why other partial subsidies for education and training. Anyway, that's by the by. What do you see happening in the next 12 months before we wrap up? Like you've updated your model and your forecasts. Is there more construction than you expected at this time of year? Are there new projects that look like they're going to come down the pipeline, or do you think
Yeah,
that 12 months out, your prediction will be correct next time and we'll be back in a year?
not brave enough. But I mean, certainly, I think it's clear that sort of everything is broadly softening.
Okay.
I think it's fairly clear that everything is broadly softening. I think, there's still approvals are coming back. So they've turned a corner. They've definitely bottomed. Building approvals are on the way back up, but they're from very low levels. But we have that lag that we spoke about before of the commencements that are still drifting into the future. So that's sort of holding up activity. So we might find we just transition into the next upswing without too much of a dip.
Wow.
And the hope is that once we get to that next upswing, the labour market has adjusted sufficiently that we don't have this significant imbalance of supply and demand. So that's a sort of 12, 24-month view. To me, the more interesting conversation, which we don't have time for, is the 10-year view, the 20-year view. If we need to get to net zero by 2050, halfway there by 2030, if we need to build a future made in Australia agenda, if we need to permanently lift the rate of new dwelling supply to, be consistent with 1.2 million new homes over 5 years, like what does that do as a demand side shock to the construction industry? It's huge. And so how do we
Yeah.
manage that transition?
Yeah, I think like all things macro, it's probably going to be a smoother curve than you expect. Like, things will just accumulate. That pipeline of tradies will grow. Um, we'll get better at doing the new things. The first new project is always costly. The second one's always better. Yeah. Are there any final words, Rob? Where should people find you if they want to keep up with your analysis on construction industry
Yeah,
workforce?
I'm on LinkedIn and I post all my stuff on there. And then of course the business Build Skills, which puts out its own stuff on the website at buildskills.com.au.
Yeah, terrific. So I recommend all listeners keep an eye on Rob's analysis on LinkedIn. That's where I always find and keep up to date with what he's doing. I appreciate your time today, mate. We'll have to do this again. Thanks for coming.